Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And today, we had vehicle sales come out today. Now, there's been talk that they're not doing that well and so forth. Yeah, they slipped a little bit. February, 17.7 million. January, 17.46 million. So a nice number there, but people still say this is not going to last. I think they're missing things. So we kind of broke it down a little bit for them. Look at Ford sales, up 20%. We got other things here as well. I mean, General Motors. I mean, look at these sales, Chase.
It's crazy. You know, they say there's a slowdown. 2015 was a great year for motor vehicle sales. Well, guess what? Take a look here, and all those companies are doing even better than last year so far. And you know, as you said, Ford's done extremely well. Fiat Chrysler sales up 12%. You know, appears like a negative here. General Motors sales down 1.5% year over year.
Yeah, what's going on?
Not that big of a deal. Because what they're doing is they're actually transitioning their business to be more profitable. They've gotten rid of the rentals. Those are down 32% year over year. But their retail sales, the more profitable business, is up 7% year over year. So that's still a positive for General Motors. Motors, you'll see a more high profit margin at the end of the quarter.
This is why I always say, look deep in the numbers, because again, General Motors looks bad, but you gotta understand the numbers, what's going on there. So, and I do remember back in 2009, put things in perspective, vehicle sales, 9 million a year, almost half what they are now. So a lot of good things going on.
Exactly.
Let's also talk about construction spending, another great thing. And these are year over year numbers. Look at construction, up 10.4%. Residential spending up 7.7%. And there's other things that you think about, or maybe you don't think about, that's going on as well in construction. A lot of people think just housing. It's not just housing, is it?
Yeah, highway and street spending was actually probably the biggest category in construction spending, up 33.9% year over year. And this one really surprised me. Offices up 24.8%. That's great to see. Great for the economy, because if there's more offices, that means more people working. We'll continue to see employment do very well.
And on the investment side, this is when you can look at a REIT, a real estate investment trust that builds big property buildings. We hold one in a portfolio. They have Class A buildings, and they're a great place to be because the tenancy is going up. People need the office space, so great things going on there. Lastly, we read the newsletter. It goes out today as well. Talked about Nordstrom this time. And I like Nordstrom. I know it's a great company. It's what I call a prime retailer. 52-week high in that stock is 83. The current price around 51. The target sell price not too good, about 60.72, with a profit goal, a profit gain about 19%. So not looking so good. What's going on here?
Yeah, well, one thing that looks very scary is that debt to equity, 322%, well above the industry average of 57%. But we took a deeper look at the numbers once again, and I'll let you talk a little bit about this because you're the one that found it. I found it very interesting when you were telling me about it, though.
Yeah. I mean, what they have is they have a banking sector. They have Nordstrom First Savings Bank. So banking and accounting is different than regular accounting. So when you see this high debt to equity, it's not a normal company. It's because of all the banking that they have. Actually, it's kind of funny. For the bank, an asset is really a liability. So it's reverse accounting, and it looks bad. And I'm telling people, I like this company. If the target price goes a little bit higher or the price goes lower, it's a buy. Make sure you understand what is going on with the financial in this company, because it can be confusing, but I think it's worth looking into.
Yeah, I mean, I love Nordstrom. It's a great company. I think the ladies love to go shop there. And you know, as you said, if that price goes down a little bit or the target price goes up, I think it could be a great investment.
You know, I was talking to a potential client. He was talking about the investments. He doesn't understand the numbers. That's what we do. We look at the numbers for people to understand those numbers, because that's how you invest. So if you have questions about your investments, or you want to have just a free consultation, talk about what we do and so forth, give us a call at 858-546-4306, or visit our website, smartinvesting2000.com.
And go to that website now so you can sign up for our upcoming workshop on March 19th from 10 a.m. to 12 p.m. at National University in RB. At the workshop, we will be analyzing a stock that could potentially be a buy. That stock is Qualcomm. Reviewing stock fundamental analysis and why it's successful, explaining when to buy and sell stock, and going over the 5 common mistakes that the average investor makes.
We hope to see you there.